Good morning. This is Horizon's Middle East and Africa, our top stories this morning. Asian stocks and U.S. futures fall, led by South Korea's Kospi as investors grapple with an AI-led market pullback. Hezbollah rejects a U.S. brokered truce in Lebanon, stalling progress in ceasefire talks between America and Iran. Plus, Nigeria capitalizes on the oil rally and investor confidence with a plan to refinance expensive debt. Our interview with Nigeria's finance minister is ahead. It's just gone 8 a.m. across the Emirates. I'm Abir Abu Omar in Dubai. Happy Friday. Perhaps not so happy for U.S. futures this morning, dropping 0.6%. Now, this follows a positive session in the S&P 500 yesterday, but what we're witnessing across the broader equities picture is a pullback in the AI trade that's been happening all over the markets over the past 10 days or so. This is also after Broadcom provided a weaker than expected outlook for AI. This is what we're seeing in the United States, but also in Asia. 1.6% lower for Asian equities, led by the Kospi, that fell as much as 7% this morning before paring back. Now, when it comes to oil prices, gaining slightly this morning, a deal, no deal, we just don't have the answers yet after Lebanon and Israeli officials met in Washington and Hezbollah rejected the ceasefire truce. When it comes to the yield on the 10-year notes, no change whatsoever this morning as we wait key economic data out of the U.S. today. Now, let's check in on how markets in Asia are faring. Winnie Su is in Singapore for us. Winnie, we're seeing some outsized losses in the Kospi this morning.
Yeah, morning, Abir. Exactly. We are seeing Korean stocks leading declines today. In Asia, you're looking at the Kospi here down almost 5%, with the small cap gauge Kosdaq seeing similar moves as well. And that kind of foreign selling of stocks also continue to drag the Korean won weaker by almost 8%. Now, you mentioned how Korean stocks have been underperforming Asian peers today. A lot of it is driven by, yes, this AI rally cooling down. But remember, South Korea has been outperforming so far this year. In fact, the world's best performing gauge this year, up more than 100%. So any pullback in the tech rally is in fact going to trigger lots of profit taking in this market. But also because South Korea's Kospi index very, very volatile. As you flip aboard and take a look at the intraday moves today, as you mentioned, at one point it was down as much as 7%. And that is showing you how South Korea's Kospi has become very concentrated. The gains are very narrowed in just the two chip makers, Samsung and SK Hynix. So any moves in these two names are going to trigger massive moves. But also when you look at the rebound here in Kospi today, it also goes to show that there is still lots of appetite when it comes to dip buying on the earnings expectation for Korean stocks.
And look, meanwhile, other stocks in Asia are feeling the pain. They're being dragged down by the disappointing results from Broadcom, but the CEO is shrugging it off.
I guess we are kind of like AI in a very surreal environment. Frankly, I don't think about it. No, it's hard not to, right. But no, just focus on fundamentals, create value, and stop thinking about your stock price. Trouble is very hard to do that.
Not concerned, as you heard there, Winnie. Investors don't seem convinced, though.
Yeah, seemingly not. As you can see that although fundamentals remain quite strong when it comes to the AI demand, the expectations have been running so high that any bits of disappointment on earnings really are now excuses for investors to take some profit from this hot tech rally. And hence you're looking at the MSCI Asia here down more than 1%, headed for a weekly loss after 2 weeks of gains. And you're seeing tech leading the declines, and that's That's why you're seeing Japan's tech-led Nikkei 225 underperforming the broader topics index, with Nasdaq also down more than 1%. Now, flip aboard, we look at where this money is really flowing into. It's going away from tech, but going into the names like the Japanese banks, now with more expectation for the Bank of Japan to hike rates later this month, and also some of these money going into the Chinese consumer names, given that they have been laggards throughout this rally as well. Back to you, Abir.
Winnie Su in Singapore with those interesting details. Thank you. Now, as traders await key U.S. payrolls data for clues on the Fed's rate path, San Francisco Fed President Mary Daly says policy is in a good place, but uncertainty remains high. She adds there is still no clear evidence of AI-driven productivity gains, though she remains bullish on the technology.
What I think of it is as, sure, it's possible that businesses are looking for cost savings and they hire fewer workers and they do just as much because they're using, an LLM assistant to help. But we just haven't heard from businesses that they're seeing transformative, ongoing productivity gains yet.
Joining us now is Anita Krishna Gupta, Wealthbrix Capital Partners CIO. Anita, we have been speaking for the past 5 minutes or so about AI and the faltering there after the weakness in outlook from Broadcom. What you're seeing across the space now, is that a momentary faltering, or is there a broader picture, a broader weakness in the picture, do you think?
Good morning, Abir. I think it's all about AI this year and for this decade. So you're going to have a few pullbacks along the year, along the next few years. When you have had this exponential rally in everything related to AI, we've had 4 particular sectors that have gone up, which is optical networking, space, semis. And, of course, when we look at these rallies, and especially even regional rallies, any index which has a higher component concentration of tech or AI has done better, which includes Korea and Taiwan. When we look at the earnings growth that we see coming out of these companies, whether it's Korean companies or whether it's the U.S. companies, U.S. earnings grew at about 28% for the first quarter year-on-year. Of that, the technology sector grew at about 48% year-on-year. Yeah. In that, semis grew at almost, 80 to 90% earnings growth. So when you've got that coming through, you will see the rally continue but falter, because when you've had, as for the Kospi, you've had, 100% gain. Yeah. If it gives back 7-8%, that's normal. Even, I would say, even if it gives back 20%, that's not abnormal. So I'm absolutely convinced about the path forward for AI, for everything that goes into what we call the AI infrastructure trade. That will continue.
And you're absolutely right. The numbers that we've been seeing are so staggering. The stocks, you've mentioned semiconductors, yes, up more than 90% this year versus yes, about 10-11% in the S&P 500. Now, do you think that move is sustainable? I mean, we're seeing a yes, correction, but what pockets of opportunity do you see aside from the obvious names in the U.S.?
Okay, so what we see is this AI productivity, is it being transferred to corporates? Now, when we look at another sector, which I forgot to mention, is quantum computing, about 50% of US companies have adopted some kind of an AI model. So this is going to translate into productivity across healthcare especially. So we see anything to do in the healthcare space, anything to do in the space sector too. Now, it's not necessarily that you've got, yes, big IPOs like, SpaceX coming up. It's not just about that. It's other space tech ventures that will also do well. Quantum computing is yet at, the cusp of taking off. But those are new sectors. So we would also focus on, besides the semis, anything that is going into AI infra build that includes the data centers. When you look at the capex spend from the hyperscalers, expected to be $1 trillion by next year. Yes, it will benefit them.
So when it comes to your overall sentiment, you remain positive on risk assets. Now, the question here is, what would it take to change that sentiment? Is it the geopolitical events that we're seeing and their sort of consequence on inflation? Is it something else happening on AI? What would it be?
Okay, so absolutely. When we are looking at what's happening with the conflict, the US, Israel, Iran conflict and the closure of the Strait of Hormuz, and you've got in terms of oil output, it's about 11 million barrels less coming to the market at this point. Now that's critical. It's critical for the global economy. You've got other essential components that go into food production, including fertilizers. You've got helium, which affects the production of semi. So we were looking at the OECD just yesterday revised downwards their expectations for global growth, for U.S. growth. They particularly see countries which are oil importers getting affected by this shortage of, essential fuel. So that's a big worry for us. Again, when we look at, the adoption of AI, now how fast that can take place, how fast can data centers be built, what is the cost? Because even the cost of producing, high band memory is going up. So that's an inflationary impact in addition to the oil disruption.
That has been a fascinating story so far this year, but I want to talk about hedges a little bit. Gold,
yes.
You hold a little bit of that in your
Yes.
portfolio. Do you see more room for upside in gold this year?
Oh, yes, we see more upside because we see central banks continue to buy. And it's again about, the US dollar. US dollar has done well because of the conflict, but we are overall a bit underweight the US dollar. We think it's going to give up some of these gains going forward into the year. And we see gold, increasingly becoming a reserve currency for central banks. So that is what we think would drive the price of gold upwards.
Well, we'll see how gold ends the year then. Anita, thank you for your time today. Anita Krishna Gupta, Wealthbrix Capital Partners CIO. Now, research analysts expect SpaceX's AI division to see 100 times revenue growth by the end of the decade to help justify a targeted $1.8 trillion valuation. Evercore ISI research analysts expect SpaceX's AI division to deliver $755 billion of sales by 2031. That's up from $3.2 billion last year. Goldman Sachs' team penciled in positive free cash flow for 2031 of more than $72 billion after hitting a trough of negative $105 billion in 2029. S&P Dow Jones Indices will keep its existing eligibility requirements for main benchmarks like the S&P 500 index, rejecting proposals for faster entry for mega cap companies. The index provider will not shorten the 12-month seasoning period for newly public companies or waive existing profitability and public float requirements based on a company's size. The decision means companies like SpaceX will not be eligible for inclusion in the S&P 500 until at least 1 year after their listing. Now, coming up, as OPEC Plus meets on Sunday for the first time since the UAE's exit, we discuss what to expect in that meeting next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Abir Abu Omar in Dubai. Now, OPEC Plus ministers gather on Sunday for their first policy meeting since the UAE left the alliance last month against a backdrop of extraordinary disruption. We look at what that means for global oil. The OPEC Plus ministerial meeting on June 7th marks the beginning of a new chapter for the oil producer alliance. After years of pushing against production limits, the United Arab Emirates left the cartel in a surprise move last month. It was the third largest OPEC contributor, accounting for 3% of global crude supply. The exit opens a possibility for the nation to get its money's worth from recent oil field expansions. State energy company ADNOC is on track to raise production capacity to 5 million barrels a day by next year, up from 3 million barrels a day back in 2018. But today, producing more oil is only a part of the equation. The ongoing crisis in the Strait of Hormuz has highlighted that easily getting those barrels to market can no longer be taken for granted. That's why ADNOC is also accelerating an expansion of its Fujairah pipeline, which runs to the Gulf of Oman, bypassing the choke point. The route already carries up to 1.5 million barrels a day and has proved to be a lifeline during the Iran war. By next year, the project will roughly double that capacity. Regional rival Saudi Arabia is also expanding alternative export routes, underscoring a wider Gulf effort to ensure that billions of dollars of production growth translate into profitable exports. It's a new reality that OPEC cannot ignore. No longer just about how much crude can be produced, but how much of it can actually be delivered? Now, for more on what to expect from the OPEC Plus meeting on Sunday, Stuart Livingstone-Wallace, our executive editor for MENA and Russia, joins us now. Stuart, I guess, what can we expect out of the meeting on Sunday?
So lots of reassuring noises. At least the delegates that we've spoken to are suggesting they're going to be bringing back the so-called missing barrels, that is the stuff they cut in 2023. They're going to be bringing it back faster. But it's all on paper. It's all very well to say we're going to increase production. And they can increase production, but they can't get that supply out to the market because the ones with the most spare capacity are the ones stuck behind Hormuz. And if you look at the prediction markets, there's basically saying there's a 45% chance of traffic through Hormuz reaching half its normal capacity by October. The crude oil market's saying the same thing. You look at the October contract for Brent right now, it's at $90 a barrel. That's hardly a resounding optimism that we're getting back to normal. So the point I think the industry is making more widely is it's all very well for OPEC or OPEC Plus to say we're going to bring more barrels to the market. And I think they really want to. The question is, can they? And the answer is probably not in the short term.
So let's pivot to the reason behind all these disruptions, the war. Hezbollah, the latest we know is that Hezbollah rejected the ceasefire talks or the truce that happened between Lebanese officials and their Israeli counterparts. What is the latest we know on that and the reason behind it?
So, I think in terms of Hezbollah's response, I don't think we were terribly surprised. It would be I think it would be a lot more surprising if they sort of fell in line with the Lebanese government and with Israel and with the US. However, I think what's key over the next few days is to look what's happening on the ground. Look what's happening to the Israeli troops. Are they withdrawing from anywhere in southern Lebanon? Is the Lebanese army moving in? And is the Lebanese army then successfully keeping those places relatively calm? And look also at what Hezbollah is doing in terms of attacks on northern Israel in particular. So I think we should anticipate that the attacks in southern Lebanon probably continue, but northern Israel is the key because that, for Israel, is the trigger to respond. So all of those things to watch. Don't look at what they're saying, look at what they're doing.
And they've certainly been continuing, especially yesterday we saw news of those attacks happening in both Lebanon and Israel. Stuart Livingstone-Wallace, our executive editor for MENA and Russia. Now, Trafigura Group made a record payout to its top traders and executives as the commodity trading giant reaped profits of over $4 billion in the first half of its financial year. The company says soaring commodity prices and disruption to global supply chains helped drive the strong performance. Swiss institutional investors are managing more than $270 billion plan to stop buying debt issued by some of the world's biggest oil and gas producers. The move follows a recommendation from a Swiss responsible investment group to blacklist bonds from firms including Exxon, Chevron, and Saudi Aramco. The recommendation does not include equity investments, for which the association said members should continue to exercise voting rights. Now, coming up, Nigeria is looking to refinance its high-costing debt as it capitalizes on higher oil prices and strong investor confidence. Our exclusive interview is next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Abir Abu Omar in Dubai. Now, Nigeria plans to refinance high-cost debt and raise funds to help plug its budget deficit by leveraging strong investor confidence. This comes as oil prices fueled by the U.S.-Iran war remain elevated. Finance Minister Tayo Oyedele tells Bloomberg's Jennifer Saposaja exclusively that the time is right.
We know the size of the deficits we need to finance. Our priority first is, can we get concessionary loans? If I get something at 2%, I don't have to pay anything for 5 years. I love that. Of course, that's not limitless. So if that doesn't happen, then you move to maybe Eurobond, commercial. For us, we're trying to establish a benchmark that if we have to do any commercial financing, it shouldn't be worse than what we'll get from the Eurobond market, because yields are down. I think as of today, we have a 5 to 10 year Eurobond in the range of 7 to 8%, much lower than it used to be. So for us, we think that the timing is good for us to be able to maybe even refinance some of our expensive past debts. but also to raise more funding for our development at this critical time.
And you said either commercial or Eurobond. How do you decide what is going to be the deciding factor and what you ultimately pursue?
Technically speaking, Eurobond is commercial as well, but what I really mean by commercial is sometimes it's bilateral, sometimes it's syndicated. So sometimes it's about the speed to market, how much you want to raise, and market conditions, right? So we'll balance that per time. We have a lot of offers. There's a lot of interest in Nigeria by investors, which is good for us.
Private, or is it
private? We have also institutional, lenders. We have these various organizations from, AFC to AFDB to Afreximbank. We also have those where they're, with other countries. So we have many options. So for us, is to take a step back and say, what's the cost, what's the risk? How does it fit into what you want to do? Is it project finance, or is it just general budget funding? So ultimately, we want to get the best results from every dollar or every naira that we spend.
Have you been able to quantify what that looks like, how much you would need?
Of course, the budget deficit is about 30 trillion naira. 30 trillion naira will be close to $16, $17 billion. And that's just what we need for 2026 budget.
That was Nigeria's finance minister speaking to Bloomberg's chief Africa correspondent, Jennifer Zabasadra. Now, for a look at some of the other stories we're following, Turkey's president has hosted Niger's military junta leader to strengthen Ankara's foothold in Africa through mining, energy, and defense cooperation. Turkey has supplied Niger with military equipment and signed a military training agreement, hoping to take advantage of the country's shift away from traditional Western partners. Zambia has raised its debt buyback offer in response to a group of bondholders who are resisting a tender that would allow the government to retire its 2053 bond. The Southern African nation says it's now offering 84.35 cents on the dollar as a best and final offer. The African Development Bank, which loaned $600 million to Zambia, has said that it would no longer be able to provide its financing at any price above these levels. And billionaire Aliko Dangote has started construction to double the capacity of his Nigerian oil refinery to 1.4 million barrels a day by the end of 2028. The expansion, along with plans for a second refinery in Eastern Africa, would give Africa's richest person a stronger grip of global fuel supply chains. Now, coming up, peace talks between the U.S. and Iran stall after Hezbollah rejects truce in Lebanon. We discuss that with Dalia Fahmy from Long Island University next. This is Bloomberg. Good morning. This is Horizon's Middle East and Africa, our top stories this morning. Asian stocks and U.S. futures fall, led by South Korea's Kospi, as investors grapple with an AI-led market pullback. Hezbollah rejects a U.S. brokered truce in Lebanon, stalling progress in ceasefire talks between America and Iran. And as a particularly virulent strain of Ebola spreads fast, our big take looks into how international aid cuts have hampered the world's ability to manage this crisis. It's just gone 8:30 a.m. across the Emirates. I'm Abir Abu Omar in Dubai, wanting to look at a quick markets check this morning. 0.6% lower for S&P futures. The S&P did close in positive territory yesterday, but perhaps what we're seeing reflected this morning is those weaker than expected results or weaker than expected outlook on AI by the chip maker giant Broadcom. So this AI rally that we've been seeing over the past couple of weeks or so, signs of that faltering is what we're witnessing in markets across the board this morning, especially in Asia. Asian equities 1.7% lower. The Kospi, a bellwether for AI investments, was down as much as 7% earlier in the day before pairing some of those losses. Winnie will talk to us a little bit more in detail about that later on. But Brent crude is what we've been discussing over the past 4 months or so. It is slightly ticking up this morning. Conversations between Lebanese officials and Israeli officials in Washington did not reap any fruit when it comes to Hezbollah, the Iran-backed militia, agreeing to those talks. We monitor if more attacks happen between Israel and Hezbollah in Lebanon. The yield on 10-year notes not doing anything this morning. We await key economic data on employment in the United States at 4:30 p.m. In U.S. hours later today. Now, for more details on what's under the hood, let's check in on how markets in Asia are doing with Winnie Su in Singapore. Winnie?
As a beer, we continue to see further weakness in Asian stocks, specifically led by the tech rally slowing down and investors rotate away from tech stocks. And that's why you are seeing Kospi here down more than 5%. And also the tech heavy gauges in Taiwan and Japan, both falling more than 1.5%. Now, it is overall that sentiment also weakening because of the uncertainty surrounding the Middle East tensions. But also it's just that AI rally seeing a bit of a cool down, especially coming after these disappointment results from Broadcom. Now, you flip the board and take a look at the currency space because we want to highlight this continuous weakness when it comes to Asia's currencies. And specifically, you are looking at, for example, the Japanese yen right now holding around that 160 level against the dollar. You have the Korean won trading at its weakest level against the dollar since 2009. And not to mention the Indonesian rupiah also at record low. Now, this is all showing how we are right now at this intervention watch. But also, if we have a hotter than expected print from the U.S. jobs data, that is likely going to add further pressure to the Asian currencies. But for now, it does raise the question if these central banks in Asia have to raise rates earlier than later.
Winnie Su in Singapore, thank you for that update. Now, just some breaking news before we head into our next conversation about India's central bank leaving its key rate at 5.25%. That's the repo rate. Pretty much in line with expectations, the estimate was for the central bank to keep its rate unchanged. Now, it also says that it is holding the rate, but it says that global bond markets remain bearish amid those inflation fears. So we turn to see if it will turn more cautious over next meetings. But for now, India keeps its main rate decision or its main key rate unchanged at 5.25. Now, turning back to the region where there's been no sign of progress in ceasefire talks between the United States and Iran after the worst burst of violence in weeks, and as the Tehran-backed Hezbollah rejected a U.S. brokered truce in Lebanon. While President Trump says ceasefire talks are in the final stages, Iran's Foreign Minister Abbas Araghchi said no tangible progress has been achieved. Joining us now to discuss more details is Dalia Fahmy, Director of International Relations and Diplomacy and Associate Professor of Political Science at Long Island University. Now, Dalia, what is if we want to know about the latest that is happening and the developments over the past 24 hours, essentially, why is Hezbollah not incentivized to agree to a deal at this point, do you think?
It's interesting because President Trump posted on Truth Social over the weekend that Hezbollah actually was coming into agreement. And so President Trump announced that that Israel and the Lebanese government had agreed to implement this new mediated ceasefire. But right after, the Israeli defense minister insisted that military operations would continue in Lebanon. And so you saw a fissure emerge between what the Lebanese president was stating that a ceasefire and a truce would be accomplished within 24 hours. And then the Hezbollah leader, Naim Qassem, said that the deal was going to be seen as a surrender and defeat. So you see a fissure happening internally, but also Hezbollah, again, Iran-backed, pointing to the fact that even since April 16th, the last ceasefire agreement, 600 Lebanese have been killed, and Israel now occupies 1/5 of the country. And so what you're seeing is that as one step is made, if all are not in agreement, there remains the internal negotiations within each country that internally and externally derail the process.
And you mentioned Naim Qasim, who also called the talks between Lebanese officials and Israel absurd. But what I am trying to get at and trying to understand is what this means for the broader MOU, as President Trump has been calling it, right? Lebanon has emerged as a main sticking point for Iran. They're their allies in Lebanon, in the southern part of Lebanon. What do you think this means for the MOU, but certainly the broader peace talks between Iran, the U.S., and Israel?
Well, one of the major sticking points is the dismantling of what are called armed forces that are not part of the Israeli military, basically Hezbollah, and creating these zones that are going to be simply the Lebanese military. And so that again harkens to the erasure of Hezbollah. Now, we all know Hezbollah is much weaker than it used to be. It's seen 2 years of heavy fighting and heavy destruction. But what this does is to the rest of the agreement is, as long as Iran ties Hezbollah and ties a ceasefire in Lebanon as a sticking point, what we're going to continue to see is that there is a derailment. And as, for example, what is happening within Israel is that the insistence of military operations to continue is that with every agreement, both sides internally find their fissures. And so you see that the next step was meant to take place on June 22nd with the next level of security negotiations. And if we can't pass this June 4th, June 5th agreement, how can we actually move to the June 22nd level of agreement? And so again, there's many moving parts. There's many aspects of this that remain undefined. And when they do become a little bit more defined, you see the internal fissures return.
And speaking of Israel, we had a story update this morning quoting some analysts saying, can President Trump really persuade Benjamin Netanyahu to not be involved, to not derail those talks? Who do you think has the upper hand at this point
it's interesting.
when it comes to the conflict? Is it the U.S. or Israel?
So Benjamin Netanyahu is facing deep criticism within Israel as being seen as listening to what President Trump wants. Now, remember, there's major elections happening inside of Israel. And this pressure Netanyahu finds himself under comes internally from the own hawks of his government. So, for example, he's being accused of, as listening to President Trump, undermining Israeli security. Naftali Bennett, the right-wing and former prime minister, says that the situation is showing that there is weak leadership within Israel. Yair Lapid has said that stronger military action needs to be taken. The Israeli defense minister has said that Israel has been held back by Benjamin Netanyahu from striking Beirut at the request of the United States, and that Netanyahu is listening to the United States and that the United States is dictating Israeli defense. And so what you're seeing happening within Israel today in terms of its leadership, but also in an election cycle year, is that the internal fissures are being reflected externally into the external negotiation that's unable to take place.
And I want to talk about some of the other concessions between the U.S. and Iran. That includes the highly enriched uranium, the frozen assets, the oil sanctions. Who do you think is going? Do you think that the U.S. will agree to Iran's concessions, or will Iran sort of let go of some of the requirements that it's been having to sign the deal? Who will blink first is what I'm trying to ask.
So interestingly enough, what we're seeing is that these concessions were where we were before the war began. In terms of the nuclear strategy. President Trump is very weary of being accused of returning back to the Obama administration's JCPOA. And so elements of these three parts of the agreement sound like the JCPOA, which President Trump really does not want to be accused of returning to. But if assets will be unfrozen, if there is this kind of negotiation happening, again, what we have to remember is that even here in the United States, there are elections coming up in November. where members of Congress, especially within the Republican Party, in the vote, for example, that we saw today on the War Powers Act, when you saw 4 members of the Republican Party side with the Democrats, is that the internal features are actually being now read externally as policy, while they're internally more about in keeping with the party and party line and what's happening within the Republican Party.
Yeah. Dalia Fahmy, Director of International Relations and Diplomacy and Associate Professor of Political Science at Long Island University. Thank you for your time today. Now, moving on to the other big story of the day. Anthropic's co-founder and president says the high cost of developing artificial intelligence models is driving firms to look to the public market for capital. Daniela Amodi spoke to us exclusively at the Bloomberg Tech Conference in San Francisco. This is days after the Claude maker filed confidentially for its highly anticipated IPO.
Yes, you're correct. We confidentially, filed our S1, and that gives us the option, to potentially go public after the SEC review. Unfortunately, that's all I can say about anything IPO related. I'm sure you understand.
I mean, if we can just maybe level up a little, what is the calculus for a kind of an AI company generally to go public or not in this moment? What are some of the pros and cons here? Because on the one hand, yes, you can access more capital if you're not a startup. But on the other, then you're beholden to quarterly results, shareholder calls, et cetera. So what are some of the pros and cons just generally for an AI startup, do you think, to go public in this moment?
So I think, at least speaking for, ourselves, and I think ideally, probably really for the AI industry more broadly, it's a very capital-intensive business to train AI models. I think that's something we've been, very open about from day one. I don't think that's, a surprise in the industry. And I think this kind of concept of how do you access the level of capital that you need to train these models, right? It's a really big kind of upfront cost to train the models and to serve inference on them. And I think that is, my guess is that, over time, the sort of core set of companies that are working to advance the frontier are just going to need access to capital. And I think the public market is very well suited to that. So there's obviously, of course, trade-offs, but my sense is there's just a fundamental structure of how training and kind of serving these models for customers works, that it will require that level of access.
As Anthropic co-founder and president Daniela Amodi. Now, Bloomberg has learned that Jane Street is planning to build and finance its own data center to keep up with growing demand for computing power. Sources say the market-making firm is talking to companies in the technology, crypto, and finance industries about building a facility. Talks are still in the early stages, and the exact capacity and location of the data center are yet to be determined. Meta's chief AI officer says the company plans to differentiate its upcoming artificial intelligence models by focusing heavily on consumer health capabilities. Alexander Wang says that this health-focused AI could eventually be integrated into Meta's mainstream applications. That includes Facebook, Instagram, and WhatsApp. Now, coming up, Ghana's central bank says there could be room for rate cuts if external shocks ease. More from our interview next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Abir Abu Ahmad in Dubai. Ghana's central bank says there could be room to resume monetary easing if the impact of external shocks begins to fade. Bank of Ghana Governor Johnson Pandit Asiama told us that the country remains resilient for now, despite higher oil prices and ongoing uncertainty linked to the Iran conflict.
We are net importers of petroleum products, even though we export crude oil. So when oil prices are going up, that has a negative impact on us nonetheless. And so that has a direct effect on export prices. So far, government has managed it quite well. We haven't had a lot of impact compared to our peer countries. We are hopeful that the crisis will continue to be a short-term one. We are watching it by the day. The good thing is that we've built adequate reserves. We believe that our resilience currently is way, way better than a year ago. And so we are watching, we are seeing things unfold. But based on the information we have currently, we have we do think that we are still on good grounds.
At what point does it become a bit more concerning? Because it's been about 3 months at this point in time.
Well, if it turns out that the crisis is going to be persistent, and if it turns out that we have to brace ourselves for full adjustment, then certainly the outlook could be impacted. But from where we sit currently, it's unfolding in line with our projections based on current data.
What does that mean for the rate hiking or easing cycle? Do we continue to see rates on hold until things really pan out in the Middle East?
Well, that would be based on the assessment of the committee as a whole. As you are aware, our framework decisions are based on the majority, majority opinion, on the panel, the 7-member panel, So it's not just my decision. It's based on what majority of the members of the MPC see. But based on the staff analysis, etc., based on our data, we think that, yes, there could be scope for a return to the easing cycle.
In 2026?
But it's all contingent, largely to this global shock and how it continues to unfold.
That was the governor of the Bank of Ghana speaking to Bloomberg's Jennifer Zapasatra. Now, Ukrainian President Volodymyr Zelensky has proposed peace talks with Russian leader Vladimir Putin in an open letter, saying Ukraine is ready for a full ceasefire during negotiations. Putin has pushed back at separate efforts by European leaders to help negotiate an end to the war, saying they cannot be mediated when actively supporting Ukraine. President Trump, though, has welcomed Zelensky's initiative.
I'm glad that they're maybe talking about meeting. I think we had a lot to do with it. I know exactly what you're doing. But I think it would be great if they met. They should get it done.
Now, coming up, we'll take a look at how Western aid cuts have left the world exposed to a new Ebola crisis. That's our big take next. This is Bloomberg. A deadly, untreatable strain of Ebola is spreading fast through a conflict-ridden region of Africa. The epidemic is spiraling out of control, exacerbated by severe foreign aid cuts, which have plunged the international system built to contain outbreaks into crisis. Our chief Africa correspondent, Jennifer Zapasatra, joins us from London to discuss more. Jen, good morning. What has been the impact of this defunding?
Really, Abir, if you take a look at what we've seen over the past year or so, funding cuts have significantly weakened any sort of preparedness for an outbreak, but then also what we see in terms of the response to an outbreak, which is essentially what is playing out in Central Africa and the DRC at this point in time. We should remember that it wasn't just USAID that we saw cut and significantly scaled back in 2025. There were also a number of other G7 countries that cut back on their own foreign aid to prioritize more of their domestic priorities and spending priorities as far as defense goes, especially across Europe. But if we look at OECD figures, the U.S. contributed, the U.S. adjustments to foreign aid was actually down just about 57%. So what does that mean? Essentially what we've seen and what we've heard from former USAID officials and also aid groups is that has significantly hampered what health officials on the ground have been able to do. There's fewer people monitoring for these potential symptoms of an outbreak in the beginning, there's also fewer resources on the ground as far as testing and contract tracing. And just to complicate matters further, it is a fragmented system and a strained health system. And so funding has been a significant contributor to some of the strain that we are seeing right now in the DRC.
So, Jen, without the surveillance networks, is there a concern that cases are being underreported?
It's a major concern, and again, we've heard that reiterated by a number of officials. Even the WHO and Africa CDC say that it's likely that this strain had been undetected for a number of months and weeks just because the testing capacity, the antibody treatments were not in place for this Bundibugyo strain. And so if you actually look at what we are seeing here, one person was actually quoted as saying they're playing catch up in the current situation. And so the concern, though, is it's unclear just how far spread this current strain is right now in this region. And again, that is the concern as far as transmission and not being able to detect any future cases.
Jennifer Sapasadra, thank you for that update. Now, you can read this story and all our previous Big Takes on Bloomberg.com and the terminal. Just type in NI Big Take Go. Well, that's it for Horizons Middle East and Africa. I'm Abir Abu Omar in Dubai. Stay with us for Daybreak Europe. This is Bloomberg.